It's Tuesday, April 24th, 2012. I'm Curtis Hollister, and you're watching The Quarter on InvestorChannel.tv. Today, we're going to be talking about GE, trading on the New York Stock Exchange under the symbol GE. And joining me is Dana Blankenhorn, a top contributor on Seeking Alpha and TheStreet.com. Dana, welcome to the show.
Good to be here.
So Dana, congrats on the new position with TheStreet.com and writing for those guys. How's it going so far?
It's going like clockwork.
Well, that's good, I guess. So we're going to talk about GE today, and they just come out with earnings that beat analyst estimates by a penny, and I think they come in around 34 cents per share. Is that right?
That's right.
So, I mean, they used to say what's good for GE is good for America. Is that still the case?
Well, the original one was What's Good for General Motors. It was by Charlie Wilson, who at that time was the GM chairman. This is in the 1950s. But GE is actually the only company that was on the Dow 30 when it launched. It's still on the Dow 30. That's how old it was. I mean, this company was Thomas Edison's exit strategy. Okay? The company was formed in order to basically get him out of day-to-day operations of electrical stuff. And so he could, do things like photographs and movie projectors and things like that. Anyway, the point is they have survived this long by giving each chairman, each generation, all the time that they needed to make the company what they wanted it to be. Jeff Immelt, the current CEO, became CEO on September 7th, 2001. He's had over 10 years to turn this company into something better than it was. The valuation is about half of what it was when he became CEO, because he has completely transformed what GE is all about.
Yeah, and GE was getting pretty big props back in the day. Jack Welch, as far as the best managed company in the world. Their systematized approach to management, etc., Sigma 6. Obviously, these are still guys with some serious bench strength and their ability to kind of operate a monster company.
Well, what Immelt did is he said, we are going to be an industrial company again. We're going to make stuff. This was the first quarter since Immelt has been CEO that they made more money from industrial products than they did from GE Capital. So that's an important benchmark for them. And the prospects for the company right now are pretty good. So if you can get in at less than $20 a share, maybe you're going to do okay. Those of us who got in for 30 and 40 back in the day, we're still not happy.
Yeah.
But today's company is about energy and healthcare for the most part. Those are the biggies. They are big on. They make the jet engines. Okay, that's what they do the commercials about now. They make wind turbines. They've just gotten into the solar business, and they make natural gas equipment that utilities can use as power overnight, like when the sun goes down. So that instead of storing the solar power, they just use it when it comes on during the day, which is when the peak load is anyway. And then at night, when the solar energy goes away, they can just turn on the natural gas.
Gotcha.
So they're doing a lot of exciting and interesting things.
Plus some battery tech, obviously, as well, that they're around electric cars. But that's there's not a payoff from that yet.
Exactly, and that's part of the problem. For instance, last year, Immelt decided to invest heavily in building a solar panel plant in Colorado. Now, the technology chose to use for that is cadmium telluride, the same technology the First Solar makes. Well, what's happened is that the cost of polysilicon, which is what we usually think of when we think of solar panels, the cost of the raw material has plunged. And with so many big Chinese companies involved, they've been oversupplying the market. Prices have plunged. They've plummeted. They plummeted, frankly, below his cost of production.
So, I mean, although they've had a drop in gross income, obviously associated with kind of some divestitures as well as just the economy in general, their earnings per share is maintained or gotten better than it has been historically. What's What's that because of? Is just strong management, or are these guys going to be able to kind of continue to navigate through a completely down economy globally? And then when it comes back, are they going to be the ones that we're all looking to jump on their bandwagon?
That's what Immel is betting. He does have some good industrial managers. He does have good people at GE Healthcare, which is, by the way, where he made his bones in the company. He came up through GE Healthcare. He does have some exciting things going on at GE Energy and in industrial equipment. He's betting that this turn of the economy is going to be all about making stuff.
Mm-hmm.
And right now, America has some significant cost advantages in terms of making stuff. We have low natural gas prices, actually below production cost of natural gas prices. We have abundant coal, which we're not using. And because we have low input costs, and we also have low taxes, and we also have labor costs that are under control because of the recession, because of all these things and high productivity, this is a good place for making stuff right now.
Mm-hmm. Obviously, the other thing with GE is they do probably have a pretty good pulse on the trend around economies globally. One of the things Immelt said within his latest quarterly results call was they're going to be watching Europe very carefully, and there has been quite a bit of divestiture of their capital division and real estate holdings out of Europe. I mean, is Europe kind of a sunk market because GE says it is?
No, Europe is a submarket because Europe is going through the same crisis that we went through in 2008. But the difference is that the solution that Europe has chosen is the solution that the United States chose in 1928. Mm-hmm. Austerity, let things go bankrupt, and the Austrian school of economics. And it doesn't work. So while the United States used Keynesianism, just flooding the economy with money, all the things that conservatives now, say they hate, it worked. What Europe has done hasn't worked.
Yeah.
What I think is happening there now is they're starting to turn through public pressure toward policies that work.
Well, and they're getting such a cultural backlash from those decisions too. I mean, you're seeing literally people rioting in the streets with any kind of fiscal policy change. Like there's such a sensitivity to it that it might be another 10 years before they come out of this.
Well, I don't know if it'll take that long. It could snap back fairly quickly. Take Spain, for instance. Spain is a really good example of what's gone wrong with policy. They have been cutting and cutting and cutting. And yeah, you're right. People were starting to riot in the streets. But in the meantime, their production and their economy has gone south. They owe more now than when they started cutting. At some point, the light bulb is going to go off in somebody's head that we need to do something different. And I think the light bulb is in the process of going off in people's heads in Europe. We need to do something different. And once that turns into policy, it'll take a couple of months, I think you're going to see a change.
Yeah, I mean, so let's go back to GE. We got basically strong operational leadership, proven track record, their ability to continue to maintain basically not only a dividend but earnings per share. Bets on industrial sector where they're going to be kind of the pivot point globally for kind of major industrial manufacturing. Pretty serious economic investment on large scale projects. So as they come back into the market, these big train systems, people ordering more planes, et cetera, they're going to be at the center of that. And them limiting their European risk. Seems like a pretty good set of conditions for possibly entering the stock.
Yes, plus don't forget, at current prices, you're looking at a yield that beats any government bond. Just raw yield. Forget about whether the stock goes up. I mean, we usually talk about whether the stock goes up or down. Yield, the dividend against the price, is a very important consideration to a lot of investors. GE is a good yielding stock.
And it's a highly liquid stock, obviously, as well.
Yes.
I mean, it's trading anywhere from 20 to 40 million shares a day. So it's trading massive shares. It's very liquid. I think this really comes down to these guys are tied to the global economy to a certain extent. And they've got such a good management team that once that takes off, everyone's going to be writing the articles in Fast Company and Business Magazine X and Y about why these guys were so smart the whole time. Never mind
Yes,
the
but you
fact.
heard it here first.
Yeah. Never mind the fact that they lost, $200 billion basically in market cap. This is what investing's all about.
Yeah, market cap can come back.
Absolutely. Anything else you want to add to this story, Dana?
Well, I own 200 shares.
Continue to load up. Continue to load up. Well, Dana,
Okay.
thanks so much for your time. And if anyone has any questions, they can reach you on your blog that's on Seeking Alpha, or they can highlight some of your articles on thestreet.com.
That's right.
Okay, thanks a lot. If you'd like more information on Dana Blankenhorn, you can check him out on Seeking Alpha. If you'd like more videos from public issuers or industry experts, you can visit investorchannel.tv. I'm Curtis Hollister. Thanks so much for watching The Quarter.